Yo, 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 what's happening, pattern watchers? I hope everyone is doing well this morning. It's the beginning of the week, or some would beg to differ. Of course, the beginning of the week is Monday, but I'm talking about trading. Tuesday is the start. This is the best time for you to consider any opportunities when you come to the game of trading itself. Why? Because everyone's absorbed all the madness and the news that have been rolled out over the weekends. Monday has initiated a false move, and now we have the structure. Tuesday, Wednesdays and Thursdays are the best time for you to trade. Now, the purpose of this video, ladies and gentlemen, is to give you a little bit of a heads up and a tool that's going to help you understand how to exploit movement by making sure that you wait for the retrace. Now, the pattern will always follow through. Sometimes it plays out, sometimes it doesn't play out. But when it doesn't play out, it gives you information on what's going to happen next. So what pattern are we talking about, ladies and gentlemen? We are making reference to this pattern right here. This is the tattoo. This is what we understand in the channel as the basis. Well, look at that nice little boomer moment for you, ladies and gentlemen. This is the structure that we look for every single day when we are coming to making a decision as to whether we want to exploit movement to the upside or to the downside. The opposite of this structure would be like this, ladies and gentlemen. Okay, so if you are new to the channel and you are trying to make sense of this madness right here, stick around and wait till the end of this video before you make the judgment as to whether or not you want to stay in this channel and get more videos and more live streams, more fire and the energy that I try and bring to all of you beautiful people just to keep you aligned with the way the market moves. Now check it, listen. This structure right here, whether it's to the upside or to the downside, is going to give you structure in understanding the market's narrative. Why? Because when you see price making a move to the upside, unfortunately, the retail trader is buying in this area here. And then when he goes long with 100x, he's getting shaken out right here. Okay, and then price continues with its movement to the upside, and then that same retail trader feels like he's missed out on an opportunity. Price then makes the move to the upside, and he would have actually ended up shaking himself out or getting liquidated, and he's not actually able to capitalize on the true intention of the move in the first place. So this video is going to try and help you understand this as soon as possible. Okay, how to exploit this pattern. Well, let's just look at Bitcoin for a split second. Okay, you can see that Bitcoin has formed a mini structure right here, nice little W formation, shifted out to the upside, and now we are actually anticipating a retrace, which is what we have. Now we're waiting for more information. Why? Because if this is going to be the structure that plays out to the upside, what would we need to see? We would need to see Bitcoin breaking out from this area right here. Okay, we've already had two hits to the high. Now, the problem that I've got with this move right here, ladies and gentlemen, is if Bitcoin is going to move higher towards the end of the week, then marking up price higher is an indication that Mr. Market Maker may be favoring shorts. Okay, you see, the retail trader sees this and says, oh my God, I've missed out on Bitcoin making a move to the upside. What do? I'm going to start buying up in here, which would explain why you see Bitcoin spiking up and down in this range and looking like it's potentially forming a flag to move higher. Now, listen, we don't know what's going to happen next, and we've got to be cool with that. All we have is what we can see right now. Now, Bitcoin is trading within the psychological ranges. They've got the idea out to us that they are looking like they want to spike higher and try and take advantage of shorts. As you can see, there is a lot of liquidations of shorts in this area right here. If we go over to the high block, that's not going to work. If we go over to the high block later on, we'll understand that there are lots of short liquidations in this area. They've already absorbed some of them already. So there are a few traders right now that have had their liquidations hit. Are they going to try and make another attempt to the upside? Well, this is where the structure of this pattern comes into play. Think about it. If they're going to break out higher, what we want to see is we want to see green vector candles coming in here with aggression and trying to shift out with speed. We want candlesticks to form and for them to completely take the range out. However, what we may get in this area is they may show some green vector candles, but not fully take out these ranges. If they do decide to take out these ranges, they may even spike them up a little bit, but then they may sharply, aggressively come back down again, which is where this pattern comes into play. You see, this structure right here, ladies and gentlemen, can give you one of two options. You can either decide to take advantage of a trade in this section right here with the intention that it's going to break out higher to the upside, okay, and then capitalize on a profit when price gets up into this area here, because this area here is where the retail trader originally had gone long, but he had got shaken out and liquidated, and he's missed out on an opportunity on price moving higher, okay? Now that he's been shaken out, the price starts to move higher again, installing in the idea to the retail trader that it's going to continue this same move that it previously has done, and it's going to move higher. But what we must be aware of is the following, that Mr. Market Maker may even decide to formulate this structure, but he may also decide to reverse it back down, which would then give us an M structure. Like I said to you, ladies and gentlemen, these patterns are not static. Okay, they are a template into helping you understand what may actually start to happen. Okay, if they are hitting the highs and not following through, it implies they are preparing for something else. Now, Bitcoin could actually shoot up from this point and finish in this area here, and then maybe try and come back down. Who knows? But right now, you've got to try and understand that this structure is going to save you a lot of money and a lot of frustration in not getting in prematurely. Why? Because when you see Bitcoin make an aggressive move to the upside, you're probably thinking, man, I've missed out on the opportunity. But the thing that needs to be going in the back of your mind is, well, I want to see the proof of the move. Because this move could actually just continue down lower. Then you'll say to yourself, well, even though I may have missed out on this opportunity, I'm going to try and exploit price action to move down lower. So there is always two narratives that you can take. You see an explosive move to the upside. The idea is if they're going to continue with that, you want to see vector candles appearing in this range. If you don't see the vector candles formulating in this zone right here, then they are actually forming stop hunt behavior where they aggressively hit the highs, but they don't actually take the highs out and they just recover the vector candle points right here, then you are getting set up for a short to the downside. But the retail trader doesn't see it like that. Okay, he sees it as Bitcoin is mooning out. I want to take advantage of it. I'm going to get my money in this area here. Okay, so to recap itself, ladies and gentlemen, the best way for you to approach the charts when it comes to this structure right here, ladies and gentlemen, is if you've missed out on an opportunity to the upside, wait to see the proof of the move and then try and take advantage of one entry from this point here and potentially this zone right here. But be mindful, because if they do break out from this point, sometimes they may try come back into that zone to retest it to continue back up. Ideally, what we're looking for is the development of vectors in this area to break through the commitment of traders in this zone. Because remember, traders were long right here. So those traders who are long that may be liquidated or waiting for price to break even, naturally in this point, we anticipate an influx of volume. How long that influx of volume and the impact of it by moving price higher is going to last for is going to be reflective on how long you decide before you take a profit when price has moved out of the range. Remember, always pay yourselves. There's no glory in leaving profit in the charts. Now, of course, if you're a swing trader and you're playing longer term plays, that's a different story. But for my day traders, always be sure to pay yourselves, because day trading is day trading. You need to get in, get out, fast in, fast out. Listen, if you are new to the channel, ladies and gentlemen, and you haven't subscribed just yet, be sure to do so. Why? Because we're going live again today, 2 p.m. GMT, to bring the fire of New York. And I love doing the New York sessions because that's when I start engaging in that sports commentary madness that people seem to enjoy. But more importantly, it brings you into understanding how, in my opinion, I translate the behavior of Mr. Market Maker by the use of the Bookmap, by looking at price action and absorbing and breaking everything down in real time. So I will catch up with you guys today at 2 p.m. GMT, and I will see you guys later. Mad love and respect to you all. Take care of yourselves. Peace.